Mortgages and good afternoon, folks. How are you? My name is Nicholas Seguin. I'm the Manager of Economic Development, Communications, and Marketing for SDG counties. We're going to hold up for about maybe 2 more minutes to see if we have a couple more participants who join. At that point, I will pass over the floor to Mr. Eric Duncan, and then Andrew will get on his way. He has a pretty detailed presentation for you. So we'll just hold tight for about, I'll wait till 12:06 and then we'll get started. Thank you.
53 people right now, 52, 53 people. We're expecting about 70, 75. So again, we'll get started in a minute or so.
Folks can join in, and we will be sharing the slide deck afterwards, so if there's any information that was missed. Once again, welcome. My name is Nicholas Seguin. I'm the Manager of Economic Development, Communications and Tourism with SDG counties. Today we're very lucky to have a gentleman by the name of Andrew Seguin join us. We asked Andrew to help out with this presentation because when you're not an expert in something, you go to someone who is. But what makes Andrew extra special is that he has a wonderful ability to break things down and a little easier to understand. And to top it off, he's an absolute gentleman. So thank you very much for coming. I don't want to take up too much of Andrew's time, but I will pass the floor over to Mr. Duncan before we get started. And again, thank you so much for coming. If you have any questions or need support from SDG counties or your local municipalities, my contact information will be a part of the follow-up email. Please reach out to us. If we don't know the answers, we'll do our best to help you find them. So thank you very much.
And good afternoon, everybody. I will be quick as well, thanking Andrew. He's helped me clarify some things, including he did a great job last night. He said, just want to clarify what Eric said to make sure on the, for example, the GST and HST filing. So that's much appreciated. And thank you to our local economic development officers that have joined. I also see Candy Pollard on here. We got a lot of stakeholders, MPP Jim McDonnell, which is great. So keep in touch, and we're going to do the same through these sessions. I appreciate the partnership with our local municipalities and Andrew doing this. I'm going to go on no video, but listen in, and I'll join you back at the end. So I hope you find this beneficial, and keep in touch with other suggestions or questions that you've got for future webinars we're happy to host. So Andrew, take it away.
Thanks, Eric. Thanks, Nick. So yeah, so my name is Andrew Seguin. If you weren't part of the town hall meeting last night, I had a little introduction to myself. So I'm the founder of Seguin Financial, which is a bookkeeping and tax firm located in Cornwall. So I'm going to start sharing my screen now because I have a pretty big slide deck to go through. All right. I'm also going to take my attendees list and put to the left. So what I like to do in regards to my type of webinars and seminars is sort of an open environment, as in if you have a question during a slide, raise your hand. So at the bottom of your screen, there should be a little attendee button, and you can raise your hand through Zoom. If you're also dialing in, I believe it's *9. So when I get that notification that you want to raise your hand, it's because you have a question related to that specific slide. I'm also going to put about 10, 15 minutes, shorter or longer, depending on how this goes, for general Q&As on any topic you want related to the different programs that are out there. So if you have a question related to a certain topic on that slide, raise your hand and I'll take a pause and I'll ask the question and go through the question. All right. So again, founder of Seguin Financial, that's me. It's my little smug face there. I opened in January 2018. So it's been over 2 years, and it's been a little fun journey for me. And I'm happy to say that we're one of the first fully paperless and cloud-based bookkeeping firms in SD&G. What does that mean? Well, it just means that we do all our work remotely. We use a lot of technology and a lot of software, needing strong internet. So thankfully, living in Cornwall, we do have strong internet, and I know they're working on that throughout the counties. So we use a lot of software to do our jobs, makes your life easier as a business owner, and it's able to help us really analyze reporting for your business. So I want to talk about the different organizations that have sponsored this webinar. So last week, a week and a half ago, I was approached by Nick and Eric from the counties and his office. So specifically about running a webinar about different topics related to the COVID-19 program. So as you know, the last 6 weeks has been weird times, very uncertain, very scary for business owners, and there's a lot of information being thrown at you. So I can understand the sort of anxiety and the stress that's affecting you in a day-to-day life. So what I've been doing is trying to make videos and keeping our clients updated on a daily basis with different topics and different updates. So when Nick and Eric reached out to me, I was happy to set up a webinar in regards to different topics. So this webinar is sponsored by the counties, the City of Cornwall, the different local municipalities. So North and South Stormont, North and South Dundas, and a little type of error there, so sorry. And Eric Duncan's office. So an overview. So the big topics were the CERB, which is the Canadian Emergency Response Benefit, the CEBA, the Canadian Emergency Business Account, and then the CEWS, the Canadian Emergency Wage Subsidy. So those are the three major programs that are currently available. I'm also going to talk about the different payment deferrals and different programs that are out there for business owners, specifically the HST deferrals, income tax deferrals, WSIB, EHT, the recently updated commercial rental assistance program, and the NRC IRAP program. Just a quick legal disclaimer. This is not intended to be legal advice, right? So I am talking about this in a sort of general high broad stroke because every business is unique. So every business has their own unique characteristics, whether, how they employ their staff, whether it's, different provincial guidelines. So, located in Ontario, I'm usually running off the Employment Standards Act in Ontario. But just keep in mind that this is a high level overview of all the programs, but I do get into the nitty gritty on the specifics, but your situation might be a little bit different than other businesses. So just keep that in mind. And I would always advise, and you'll hear this throughout the webinars, please consult with your own bookkeeper and or accountant. One of the things that we do for our clients is that we become a part of your team, right? So we're very involved in your business. We're involved through payroll, bookkeeping, tax returns, tax planning, analysis. So we're very involved, and I always try to recommend business owners to reach out to their accountant and bookkeeper likewise, because I think it's important to be working together as a team, especially during these times. And as you definitely know, is every day Prime Minister Justin Trudeau is announcing different updates, and one of the updates happened this morning was the commercial rent assistance. More information in regards to that. So things are changing, and they're very fluid, and every day more information is being provided to us. So this webinar might be outdated by Monday. So just keep that in mind. But a lot of these programs have been approved through tax legislation. So if changes are going to happen, they're going to be very slight and little amendments. So let's dive into the CERB, which stands for the Canadian Emergency Response Benefit. That officially passed legislation on March 24th, 2020, and it's called Bill C-13. So that's the actual specific bill tax name. So it's Bill C-13. It was the first major program to be released for individuals being impacted by COVID-19. It had initial gaps. When it first started, it was very specific, and it definitely missed a lot of people. But over the last 4 weeks, those gaps have been improved upon, and it has definitely been hitting a lot more people throughout the program. I think last stat I heard was something like 5 million different 5 million applications that were processed through the CERB, which is a lot. It's a substantial amount of people in our country that are going through this program. So eligibility. So as you know, you're always hearing $2,000 a month. In reality, it's actually $500 a week. And if you take that weekly amount and transpose on a monthly basis, it's actually a bit more than $2,000 a month. So it's $2,167 a month, which doesn't sound like a lot, but in this time, it's 7-8% increase of what people actually think they're receiving. So keep that in mind. It's actually a bit more than $2,000 a month, which clearly will help during these times. There is a threshold in regards to income. So, the one number you're hearing a lot is $1,000, $1,000 of income. And people are like, well, what does that mean? Well, it means it's from sources of employment, self-employment, and non-eligible dividends. That's the sort of the trifecta of the more common type of income. So if you are receiving rental income, right? If you're a landlord and you have rental income, you can still be eligible for the CERB. That income will not dictate whether you're eligible or not. There'll be other requirements to determine if you are eligible. So if you work in a full-time job and you've lost your job and you're and you have a couple properties you manage and there's rental income there, that rental income will not affect your CERB eligibility. So keep that in mind, and that might help you. And there's other sources of income that will not affect the CERB eligibility. You've also had to have $5,000 of income in the last 12 months or in 2019. So the last 12 months or 2019, either or, to be eligible. And again, what they mean by income is employment, self-employment, non-eligible. So not only does rental income not count towards the $1,000 threshold, but it also doesn't count towards your minimum threshold. So if you're a landlord and that's your full-time job, and that's all you do, and all you did in 2019 is you had 10 different properties you manage, and you're a sole proprietor and you didn't have any wages or salary, you would not be eligible for the CERB because you didn't have any employment sources of income. Okay. Payments. So this is a hot topic, and you know, before I continue here, I wanted to say that at the end of the day, this benefit is a broad stroke benefit. So what I mean by that is, don't be mad at people for receiving a benefit when you don't think they deserve it. Okay. It's very important to understand is that to implement a program like this and how efficiently and how quickly they did it, we have to commend the government for that. And it's not a time to be mad at your neighbors or colleagues or friends for getting CERB payment when you don't think they deserve it. It's not the time for that. At the end of the day, we as a country and as a community need to be helping the most amount of people as fast as possible. And to ensure that happens, you have to have a broad stroke to do this. To do an audit like EI used to be, right? What I mean by that is determining based on a record of employment and how many hours you worked and what was your income. It would have taken too long. Like for one person to go through the EI program, it take 2 weeks. And Eric mentioned this a few times that the EI program has been deficient for the past 10 years. So it's not a strong system. So could you imagine 5 million people going through the CERB program where they're auditing or checking your data? It would take weeks instead of 2 days or 3 days to get your payment. So keep that in mind. Individuals will collect CERB even when EI benefits might be higher. So the EI maximum threshold was $587 a week, but the CERB is $500 a week. So you might have been receiving, you might have been eligible for higher EI benefits at $587 a week, but now you're only getting $500 a week. So that's something to keep in mind. But it's also the other spectrum too, is that you might have been eligible for EI at a reduced rate, say $200 a week or $250 a week, but now you're getting $500 a week. So this is that one topic I mentioned just a while ago, is that be mindful, don't be upset at people, right? It's not their fault that they've lost their job. And if they were working part-time, who knows what their situation was? Maybe they're a part-time parent, a full-time parent working from home, you know, single parent, taking care of a loved one. We don't know the situation. So just be mindful of you know, if you're on social media or talking to your friends and family members, is that someone is benefiting out of the situation, but it's important for that to happen on a broad stroke. One thing to keep in mind as well is that the CERB is taxable, and they're not withholding sources like tax sources like what they do with EI. So I would advise a 20% minimum of withholding yourself personally. So what I mean by that is when you're getting your $2,000 payment, put away 20%, $400. It's something I would recommend for everyone, no matter what, regardless you're making $30,000 a year, you're making $80,000 a year. I would recommend as best as possible to put away 20%, because they're not taking taxes off your payment now, but you will have to pay taxes in 2020, your 2020 tax year next year. And there will be a sort of reconciliation audit process. And if you didn't put any money away, it's going to be a bit surprised, and don't get mad at your tax preparer, someone like me or my team, because we're not the ones responsible for for telling you that you're going to owe some taxes at the end of the year. So just keep that in mind. The application process. So it's for individuals that will apply on every 4-week period. And it is not a automated process, as in you will have to reapply every 4 weeks. So the first period was, I think, March 15th to April 11th. You would have had to reapply for the second period that we're in now. They put into the tax bill, which is interesting, I think beneficial for a lot of people, is that this benefit is available up until October 3rd, which means that we don't know what the situation is going to be like in the next month or two, right? I know we're in the process of flattening the curve, which is great, but this could be everlasting effects for the next little while. So they have put a stipulation that your benefit could be available up until October 3rd. So you would apply through 2 different means: your CRA My Account, and you can register for that online. And the problem with that is that does take some time to register. You got to get a letter in the mail with a specific code to ensure that's not fraudulent. Or I want to say a much cleaner and better system is the automated phone system. You have to call in and they ask you a few questions, but the benefit about the system is that you don't need your CRA My Account. However, I do recommend to have your CRA My Account because you can register for direct deposit. And that's important because then you're not waiting in the mail for a check, and who knows what your address was when you registered, right? Because if you haven't updated your CRA account for your address, you might get your check lost in the mail or going to the wrong address or an older address. So I would recommend as much as possible to go through your CRA My Account. So some frequently asked questions that I've received and my team's received in the last little while. So let's dive through those. And these are, you gotta understand, these are common questions. And if I'm missing a question in the next slides, just raise your hand and I'll be happy to answer as best I can. If I quit my job voluntarily, am I eligible for the CERB? No. You have must stop working due to COVID-19. And some examples is you were laid off. If you are sick, you're taking care of a family member, you cannot quit voluntarily and be on the CERB. And that's an important distinction because I'm hearing a lot of rumbles that people are going on the CERB voluntarily, as in they've been offered a job or they were working and they personally decided that I don't want to work at this during this time because of different reasons. That is considered voluntary, you voluntarily quitting your job. If there's a job available for you and your employer has asked you to come in and you don't want to come in, if they are at least making sure that all the proper recommendations are in place at the place of employment, you are essentially quitting your job voluntarily, which makes you disqualified for the CERB. I'm just inviting somebody else back in here. So keep that in mind, is that if you voluntarily quit your job, you are not eligible for the CERB. So I'm just looking at the chat here. Thank you. Okay, keep going. If I lost my job before March 15th, am I eligible for the CERB? Your claim will be processed under the pre-existing EI rules. However, if you're not eligible for EI, you may be eligible for the CERB. So what I mean by that is, let's say you didn't have enough hours for EI, right? Because EI, there was a stipulation in regards to a minimum amount of hours worked to be eligible. And that's based on your averaging of earnings for the last, whatever it is, 27 pay periods, 52 weeks. If you're not eligible for that because you didn't hit your threshold, it is possible you may be eligible for the CERB. So if you were laid off before March 15th, you can potentially be on the CERB based on your eligibility requirements. What counts towards $1,000 of income? So I mentioned that one just a while ago, but I want to expand on this a bit more. This has been an updated answer from CRA, which is very important to understand for small businesses and sole proprietors or partnerships. They define income as net income. So revenue minus expenses. There was a hot topic with my colleagues and I for the last 2 weeks saying, what do they mean by income? What do they mean? Like as an employee, it's your gross wages. That's pretty easy to understand. Those are your wages. That's your income. For self-employment people, well, it's a different story, right? You might be having $3,000 of ongoing operating costs, things like rent, utilities. Just because you made $3,000 of a revenue doesn't mean you actually made any money personally. So we did get confirmation that CRA does mean net income, and it's on their website. So they mean revenue minus expenses. So you could be making $1,000 of net income per 4-week period and still be eligible for the CERB. However, there's a sort of caveat that I'm going to mention very briefly about that. So employment, things like wages, tips, and other examples of income is non-eligible dividends, royalties. When you're getting paid as an artist, there's different thresholds and stuff, but that's what they mean by income towards the CERB. What happens if I receive a duplicate payment? You will have to repay any additional CERB payment you received in error. This will be reconciled and audited next year. The ongoing joke I've been telling my team is that at the end of the year, unemployment will be 0% because CRA is going to have to hire so many people to be auditing all these different programs. So it's like, we might be 15% unemployment by October, but we'll hit 0% by the end of the year because they're going to hire so many people to be auditing different programs. So the CERB, the CEWS, the CEBA, it's going to take a lot of work on their end. I'm a bit afraid for those auditors, but just keep in mind is that any duplicate payment will be repaid next year. Or now, if you receive the check, you can actually just mail it back. Is the renewal process automatic? No, you'll have to reapply every 4 weeks because just because you're eligible in the first period doesn't mean you're eligible for the second period and vice versa. So every 4 weeks, you have to attest to your requirements based on your eligibility. This is a big one. So I kept this one last because I think this is, in my opinion, the most amount of discussion I've been having from my clients, non-clients, is that can I still be working while receiving the CERB? The current legislation, so these changes that the $1,000 change, for instance, last week still hasn't been amended in C13. So the tax bill I mentioned is that they can be updating their website, CRA's website, which is confusing, but if it hasn't been truly updated in the tax bill, it's not law yet. And at the end of the day, it's difficult for accountants like us to be interpreting this information in different ways, as in the tax bill says one thing, the CRA website would say complete something else. So current legislation states that you are not working while receiving the CERB. I want you, I need to make sure this is very clear here, is that at the moment, that's what it's saying. I think the intention is that you can be making $1,000 a month regardless of how many hours you worked, right? And that's really important for self-employment people, is that they might be working their butts off 20 hours, 30 hours, 40 hours a week just to make $4,000 a month during these times, $4,000 a month of revenue. But that might just be barely enough to cover their expenses, their overhead. So currently, this legislation states that you are not working while receiving the CERB. But if you think about it, it's counterintuitive to what they're saying on the $1,000 threshold, right? How are you making $1,000 if you're not working? And I agree with that. There's not many people that can be making $1,000 without any work. The only special requirement, like people I would think that would apply to, is people who are getting paid for work done in the past. So, let's say you had to close a contract, or you're getting paid commission from a sale that 2 months ago, and based on your employment agreement or based on whatever you're getting paid after the fact, well, that would sort of fall under that umbrella. But it's a very small population of people. So I think what they're going to do is amending the tax bill so that working could be a non-requirement, as in like you can be working and receiving $1,000 or less and still be eligible for the CERB. That's what I'm thinking. But at the moment, again, is that it states that you are not working, period, at all. So even if you're managing your online store as a sole practitioner, even if you're calling customers, that's considered work. That is considered work. So just be mindful, be cautious. that's what the current tax legislation states. So if anybody has any questions in regards to the CERB, feel free to ask them now. You can raise your hand in Zoom, and then you can ask a question. That's usually the best way. Or if you don't want, you can just ask a question in chat, whatever is easier for you. But doesn't seem to be any questions.
Andrew, I think there's a couple in the chat right now. I think,
Okay.
or at least one, I believe there is, 1223 from Colleen Campbell.
Right, you can register and still apply for the CERB right away. You don't have to wait. Yeah, so as I mentioned, that you can call on the phone through the automated system. And the benefit about that is that you don't have to wait for your code. The only benefit about applying through your CRA My Account is that you can update your direct deposit information. So you're going to be waiting less for that $2,000 payment to come in. Instead of waiting in the mail, it's going to come directly into your bank account. So, so absolutely, if you need that money today, just use the automated phone system. It's a better system instead of having to wait for a code in the mail. Any other questions? Question here. So, oh, 2 questions. So I think I go lower hand. Trying to see here. Okay. Oops. Colleen had a question. So let me unmute you, Colleen.
Hello.
All right, go ahead, Colleen.
I don't have a question. I actually, you can apply for it online through the CRA and they let you go through right away. Then you get the code later in the mail.
Oh, okay, so actually that's good to know. So people who have who don't have a phone, let's say, because some people might not have a phone. So that's actually, I appreciate the information. So you can apply through the CRA website, but I guess you can't update your direct deposit information without that code, right?
I got a check in the mail.
You got a check in the mail, which is, listen, was that pretty quick too? Like
very quick, yeah, a few days.
Great, awesome. That's really, really good to hear. Okay, thank you for that.
Welcome.
So mute you. Okay, another question. So I'm gonna lower your hand. It's a phone call coming in. He's got to press *9. Go ahead. There was a hand up, one of the phone numbers. It wasn't. Actually, Adrian, quick question for you. When someone's calling in by phone, do I have to unmute their phone as well? So I use Google Meet typically, so it's a bit different process.
I think you do, Andrew. I'm pretty sure if you scroll down.
Yeah. Okay, I'm going to mute them. There you go. All right, go ahead. Try it again this time.
Hi, I just have a quick question.
Yes.
If we have work for employees, but they're choosing not to be here because they're not comfortable working around so many people during this, are they allowed to apply for the CERB?
Great question. So as I mentioned a while ago, and this is where at the end of the day, I'm not a lawyer, but and having a strong employment lawyer will be important here because there's going to be a lot of different cases going on. But if work is available to them, as in you saying, hey, we want you to work 15 hours a week. And they're saying, no, I don't want to work because I don't trust COVID-19. I'm not comfortable. They are not eligible for the CERB because they're voluntarily quitting their job. So the important distinction is that you have been laid off or you've been sick or taking care of a loved one who's been affected by COVID-19. If you have voluntarily quit your job, and that's what it is. It's because think about this, if COVID-19 wasn't in place and you asked someone to come to work and they didn't want to come to work, well, what would you consider that as? It's sort of them quitting their job. But the problem with this is that it's unprecedented times. It's a very weird situation we're in. So this is where I would say talk to a lawyer or talk to the employee and try to work a system out, because if you have work available for them and they're not wanting to go to work, they can't choose themselves at the moment, especially if you've implemented all the proper health procedures, health and safety procedures. They can't decide themselves to just not work. They've had to have been laid off.
Okay, so what if they have an underlying medical condition though, and they feel that they need to stay home?
Yeah, so this is where it's going to get muddy. And this is where I cannot give you legal advice here. And I would definitely recommend talking to an employment lawyer. But currently what it states is that if you are voluntarily quitting, and this is where it gets muddy, because are they voluntarily quitting, right? Like if you're putting the proper health procedures in place. So let's say someone's working at a vineyard where they're going to have no impact in communicating or physically being around people, but they don't want to work during these times. That's, in my opinion, voluntarily quitting. It's like if you put all the proper procedures in place and everything's super safe and they don't want to work during these times, which I understand on a personal level, I can understand that. But if you're accommodating to all their requests as an employer level and an employee level, and they're still not working, at that point in time, it could be considered them voluntarily quitting. But as a note, I would definitely highly recommend talking to an employment lawyer for that specific situation, because it can get very, very gray.
Okay, thank you.
Yeah, no problem. You're welcome. Okay, any more questions about the CERB? That's acronym number 1. Okay, let's go through the CEBA. So this is the Canadian Emergency Business Account, which was announced on March 27th. It is the second major loan program after the BDC EDC injection. So that was the BDC EDC injection was the sort of first like loan financing availability, and it was $10 billion, and they got swarmed very quickly. So the federal government kind of were swift in regards to making a secondary program, and that's the CEBA. It recently relaxed its eligibility requirement, so they lowered the minimum and increased the maximum for businesses in 2019. So eligibility. So you needed to have a minimum of $20,000 of payroll or up to 1.5 million. So if you're in that threshold, and how you determine that is you look in your box 14 of your T4 summary. So if you're asking what that is, it's box 14 are items like wages, commission, taxable benefits. So box 14 is the determination factor if you're eligible for the CEBA or not. Okay, that's really important to understand, is that do not apply for the CEBA if you don't have $20,000 of box 14. Okay, you must have had a business checking account on or prior to March 1st. There was a really great question last night, and a great point is that if you had a personal checking account that you're using for your business, I would reach out to your account manager, because they do state it has to be a business checking account. So we have a question from Ashley here. So I'm going to unmute and lower your hand. Go ahead, Ashley.
Hi, Andrew. Sorry, I couldn't figure out how to raise my hand earlier.
That's okay, no worries.
So basically what my question is that I'm self-employed, and my husband and I are the only two that work.
Okay.
Now, I've had to take the time off because I have 2 children that I need to care for.
Yeah.
And we've been fortunate enough that my husband can still do like night shifts because everybody's gone. I just don't know how to go about it. Like if I would even be able to apply for the CERB or not. So
a few quick questions is that when you're mentioning your spouse's working night shifts, you mean night shifts through the business or through employment?
So he is an employee through the company that we work with or for, right? Like through my company. So he's your spouse is an employee of your company?
Yeah.
Yeah.
Okay. Is it a partnership or is it a sole proprietorship?
It's sole proprietor at this point. We haven't had a chance to switch it up.
So it's under your name personally, the business under your name personally, and he's employed?
Correct.
Okay. That one's tricky because, but so how that one's going to work is that, so if he's working through the business at the moment?
Yes.
And you are not?
I am not, because I've had to stay home with the children. So basically, like I do a cleaning service. So all the residential cleaning had to be canceled.
Right. But commercial is still up and running, probably more so than before.
Actually, no, we've actually still lost commercial as well.
Okay.
So what I'm worried about is if there's gonna be even more cancellations,
Sure.
if he's out of work too.
Yes. So to answer, so this is where it gets tricky because this is very unfortunate, but because the business is structured as sole proprietorship, all the income belongs to you initially on paper.
Okay.
So what you're going to have to essentially do or prove, you can be eligible for the CERB. So if you stopped working in your business, but the business is generating income, your net income cannot be more than $1,000 a month. Essentially, right? It's
Okay.
like, because as soon as that threshold is hit, you become ineligible because you've passed that $1,000 of net income. So this is a very unique situation, actually. So essentially, on a broad stroke answer is that if you stopped working, if your spouse is still working, he won't be eligible for the CERB, but it's potentially you might be eligible for the CERB as long as the business is not generating more than $1,000 of net income.
Okay, and that was net income from what I understood.
Net income, yeah. So this is where having an accounting solution is going to be nice to have, or some bookkeeping in effect, because as soon as you pass over that $1,000 threshold, that makes you completely ineligible. Doesn't matter if it's off by $1, it's $1,000 of net income through your business.
Okay, perfect. Thank you.
No problem. So as mentioned in the town hall meeting last night, is that you must have had a business checking account on or prior to March 1st. If you have a checking account, oh, sorry, I'm seeing questions in the chat. Oh, I'm so sorry here. Okay, let me ask you, let me answer this question before I move on here. Where's the chat? Here we go. Is net income self-employed based on cash or accrual basis? If we receive payment in April for work done in January, does that make us not qualify? Great question, Tanya. So let me talk about that very quickly. Businesses in Canada, there's only two types of industries who can run on a cash basis. That's farmers and fisheries. So businesses in Canada run on a accrual basis, which means if I invoice you March 31st, I'm showing the income March 31st, regardless if you pay me in April or May. So for the CERB eligibility, it's going to be based on typical accounting structure. So if you invoice March 31st, that's when you're showing your income, regardless if you got paid in April. So, okay. So hopefully that answers the question. So if you receive a payment in April, that doesn't make you disqualified for the CERB. If I'm able to sell gift certificates while my business is currently closed, is that considered income? And does that make me ineligible for the CERB? Great question, Cheryl. So the answer is very complicated, but typically bookkeepers and accountants like myself will treat gift certificates sold as a liability, not income. So we only treat the income whenever it is redeemed. So when someone physically comes to the store or physically buys product, that's when we trigger the income threshold. So selling gift certificates does not determine income. It's only when someone physically comes into the store after the fact to acquire the service or product. So, but it's complex because CRA doesn't really dictate gift certificates that way. They do treat it as income, but I'm happy to defend that argument. At the end of the day, it's like, that's just how all accountants treat gift certificates. So I would say gift certificates in a reasonable, modest way, it would be not considered income. Penny would like, perfect, thank you, no problem. Okay, just bear with me here. There's another question I'll ask, I'll get in a sec here. So Canadian operating, oh yeah, so let's go back. So it's a lot easier for me to see questions through the hand raising because I have two screens open. I have the participants open in one. So as much as possible, try to raise your hand as much as possible. So back to the CEBA. So a Canadian operating business as of March 1st and acknowledges that its intention is to continue to operate its business. Something to keep in mind is that if you open, if you get a CEBA loan and your intention is to close in April or May, that's considered fraudulent. It's offside and something I would not recommend. So it's a $40,000 0% interest line of credit. It is forgivable for 25% which is $10,000 if you pay by December 31st, 2022. So again, 25% of the total loan would be forgivable if you pay by December 31, 2022. Something to keep in mind, I've noticed that each bank shows the figure in different ways. So if you log into your bank, one might show like a line of credit, one might show as a loan, one might show as a credit card line of credit. So just keep that in mind, but it's structured all the same. All banks will structure the loan the same way as a line of credit, 0% up until the end of the term. Application. So you will apply through your primary financial institution online. I don't know if you can actually apply by phone. I've heard some stories that you can, but as far as I'm aware, you have to attest. You're testing to a few different questions when you're applying. So I would say apply through online. Funds must be used to pay non-deferrable operating expenses. So items like payroll, items like rent, utilities, insurance. It cannot be used to refinance existing debt, dividends, or increase to management compensation. So you can't use the CEBA line of credit to pay off your CRA debt. You can't use the CEBA loan to pay off your vehicle. Like, you have to use it for ongoing current debt, as in like, you know, if you're getting a BDC loan, money's coming out, you can use it for that. But you can't use $40,000 of the CEBA loan to pay off, you know, your mortgage. You can't do that. It has to be used for non-deferrable operating expenses. So I gave some examples there. Some frequently asked questions. So I mentioned a while ago is that if I didn't have $20,000 in box 14, can I still apply? No. At this moment, you must have had $20,000 in box 14 of your T4 summary. The Eric, Jim, the CFIB, there's been a lot of sort of focused voice in regards to putting pressure to expand this criteria again. So it was 50,000, now it's 20. And the problem with that is that a lot of sole practitioners, sole proprietors don't have payroll. So whether you're a small retail shop, mom and pop shop, and you don't have any staff, you run it yourself, 8 to 4, 9 to 5, well, you wouldn't have any payroll. So you are not eligible for the CEBA. So it's a weird situation we're in, and I hope they do increase the flexibility there as well. So Jane mentions CEBA requires charities to have part of their income from sales of goods and services. We provide programs for adults with developmental disabilities, and our participants pay a small HSC exempt fee for this. Is this a service, and do we still qualify? I'm not really understanding that, because CEBA has nothing to do with sales. Like, as long as you're operating in Canada and you've had $20,000 of payroll costs in 2019, so CEBA has nothing to do with actual sales. Like, you don't need to show a reduction in revenue. You don't need to show, you just needed to have $20,000 of payroll costs, an active business, a bank account for 2019. So I'll keep going if you want to maybe clarify what you mean there, but a charity nonprofit can be eligible for the CEBA loan as long as they had $20,000 of box 14 and T4 summary. Okay, to expand in here. From the application, it is not a union, charitable, religious, or fraternal organization or entity owned by a registered T2 that generates a portion of the revenue from the sales of goods services. I guess you're talking about specifically in regards to charity. So I must have missed that part because I was just reading about the income. But yeah, so there is stipulations in regards to the different businesses, but to be honest, I haven't really looked too much into the actual exclusions for the different businesses, because there's so many different types of exclusions and inclusions. And we don't have a lot of charities that we do bookkeeping for. So forgive me then if the case is actually charities are not eligible. And that specific question, I would just talk to your accountant, talk to the auditor on the file, and they'd be able to help you out. So can I use CEBA to pay off my prior HST debt? No, it's not advisable. There could be severe penalties if an audit were to occur. It must be used to pay ongoing operating expenses. What's the best way to use a CEBA? I would recommend using it in partnership with the CEWS. So using both the line of credit and the wage subsidy together will help your cash flow during these times. I've heard conflicting information. Do you have to pay back the entire $40,000 and then get refunded $10,000 or just the 30? It's a great question, Nancy. And to be honest, I don't know the actual specifics because you're right. I don't know if you have to pay the 40 and then you get reimbursement from the federal government for the 10, or you pay the 10 and you get reimbursed for the 40, the 10. If I had to make a guess, it's probably paying off the full 40. And then they're going to get some kind of application process, probably through a tax credit, like through your tax return. That's the way I'm going to guess to implement and to sort of audit that. If I had to make a guess, it's like you will pay your full 40, and then they'll give you $10,000 as a sort of income in your tax return on this personal side, like if you're T2125, or your corporate side T2. That's my guess. If I hear any more information, I'll put it on my Facebook. Can I backdate a 2019 T4 today to show I had $20,000 of wages? This could be considered fraudulent, especially if you would not have done this before CEBA was announced. So try to be considered on-site. You don't want to suddenly make a T4 and your business has never made a T4 in a while. Now, not saying that you can't do it if it's legitimate, right? But don't just do one for the sake of doing one to be approved for the CEBA. It can be considered offside. How do I track the spending? So as I mentioned, you have to use it for ongoing operational costs. I would implement an accounting solution in this case here, because they can help you track the proper expenses against the loan. Just a suggestion. Will the loan forgiveness be taxable? Yes, the 25% will be taxable once you receive the report of the loan that's forgiven. So any questions on the CEBA? That one is actually the easiest one to be talking about because there's not many exclusions. It's essentially primarily based on employment, so payroll for 2019, bank account, and using the loan for a very specific reason. So there's no questions. I'll keep going. Hopefully everyone's having some fun so far. And hopefully it's not too dry. So the CEWS, the Canadian Emergency Wage Subsidy, officially passed legislation on April 11, 2020, which is called Bill C-14. It's the largest COVID program. It's $71 billion of subsidy, and it's the most difficult and complex program of them all. Are you enjoying all the acronyms? So we got CERB, CEBA, CEWS. There's now we got the CECRA, which is the Commercial Rent Assistance, and now we got the student one. It's getting kind of funny here. So this is the most important one, okay? So I think the CERB is sort of easy to understand in regards to $1,000 not working, okay? The CEBA, $20,000 of payroll, 2019, got to use it for expenses, great. This one, I want you to just pay attention next 15 minutes because it's very complex. I've tried to simplify it as best I can, as Nick mentioned earlier on. That's what we do at our firm. We take a very complex and complicated matter and we try to simplify it and streamline it as best as possible for business owners like yourself. Okay, are you ready? So it's available to a large majority of businesses, exception public institutions. So that's like schools and hospitals. You must have had a CRA payroll number on March 15th. Okay, so if you open one on the 16th, you're automatically ineligible. Okay, so that means if you're a new business that's open up on April 1st, right there alone, that makes you completely ineligible. You have had to have an experience, you've experienced an eligible reduction in revenue. So I'm going to talk about that next slide now. So what do they mean by a reduction in revenue? So they essentially determine based on your revenue, right? So it's items that you sell, services, products, ongoing operational, anything that you would normally do, that's considered revenue, okay? And you must determine if you reduce revenue makes you eligible to qualify. And I'll talk about the qualification process there. This is really important to know. A lot of people are not knowing this. And I'm always having to reiterate this over and over again, which is fine. I have no problem with that. If you qualify for one period, you automatically qualify for the following period. Okay, so if that means you qualify for March's 20 eligibility, you automatically get qualified for April. So that means you have 8 weeks of wage subsidy available for you by having a reduction in revenue from March. That also means if you qualify for April, you automatically qualify for May. So let me explain that one more time, because it's very confusing at first, but it's going to click in. If you get March, you get April. If you don't get April, you can try for May by itself. If you do get April, you automatically get May. So all you need is to have a revenue reduction in March and April. You get all 3 months. If you get March, you get April. If you don't get April, you can try for May by itself. Okay, that's super important to understand, because then it helps you sort of determine and start preparing for the wage subsidy calculations ahead of time. Because if you know you got March, you got an April. So keep that in mind, and it's going to help a lot of businesses during these times. And you also have 2 options to choose from when you're determining your benchmark. This is where having a strong accounting solution will greatly assist you. Like if you have payroll, I would highly recommend looking at your accounting solution or implement one like today, because these benchmarks, when you look here, it's very overwhelming. We've been spending a lot of time behind the scenes this week for our clients, and we've been looking at different scenarios. So let's talk about this, because this is very important to understand. So to be eligible for the CEWS, you needed to have a 15% reduction in revenue. To determine that 15%, you have 2 benchmark options. You can look at March 2020 to March 2019, which is called year over year, or you can look at March 2020 compared to your January and February 2020. So I'll repeat that one more time. To determine if you're eligible for the CEWS, a 15% reduction has had to happen. Your revenue reduction is going to be based off 2 different options. Option 1 is going to be comparing year over year. So March 2020 to March 2019. Second option, March 2020 compared to the average of January and February together of 2020. If you hit that threshold of 15%, you get March's subsidy based on the pay dates of 15th to 11th. Because you got March, you automatically get April, which is pay dates from the 12th until the 9th. So if you get a 15% reduction in March, you automatically get subsidized for wages paid on a general sense from the 15th of March to May 9th, based on the pay date, not based on pay period end date, based on when the employees got physically paid. Okay. So then look at April and May, those get bumped up to 30%. So having an accounting solution in place is going to be very important for bare minimum March, because March makes you eligible for 8 weeks if you get March's 15% reduction. And you will have to prove this. I'm hearing rumors that CRA is going to be doing early audits actually on this sometime in June, because it's such a substantial amount of subsidy being provided to the nation, $71 billion. It's the most expensive program out there. So they're going to be doing a lot of audits on this program. So this slide deck will be provided to you, and hopefully it can assist you. But that's really important to understand as a revenue eligibility, okay? So they define things of revenue as selling goods, rendering services, and other uses of your resources. It's very complex in the tax bill what they define as revenue. At first, I always think about this. Is it normal? Is it operational? Is it ongoing? Yes, then that's your revenue. They have a sort of exclusion of extraordinary items. We're not really sure what they mean by that. I don't think they even know what they mean by that. They probably just put it in because we can. My opinion, those are sort of outlier items that is a one-time thing that will never happen again. That's what I think initially as extraordinary items. But most businesses will be based off their typical selling of their goods, services, products, etc. Not only that, not only do you have to use 2 different benchmarks, but there was a question a while ago about cash and accrual basis. So you can actually use either or as well. So not only will you have two different scenarios to look at for benchmarks for your revenue, so year over year or year over average. But not only that, you can also toggle between cash or accrual basis. But when you pick whichever method you pick, you have to pick that throughout the rest of the program. You can't be flip-flopping back and forth. So it's very important to be sort of strategizing, not in a fraudulent or in a sort of negative, taking advantage way, but just strategizing in regards to cash flow, right? Knowing that, hey, this money's coming in. Yeah, I can increase labor because it's taking a lot more time and resources to be implementing an e-commerce store or curbside pickup. So it's important to be sort of planning ahead. So just to summarize cash and accrual basis again, is that cash basis is based on when money was received. So if I invoice you March 31st, but you pay me in May, cash basis is going to show the income in May. But accrual basis, that same example, if I invoice you March 31st, you pay me in May, I don't care when you pay me. I'm going to show the income and the revenue in March. Thankfully, we have an accounting solution for all our clients that can toggle between cash and accrual basis. And it's actually been very helpful because some clients were actually ineligible for accrual basis, but were eligible for cash basis. And let me explain an example. Let's say I do a lot of invoicing for March. I was very busy mid-March. But a lot of my clients are having cash flow issues, right? It's affecting everyone nationwide. So if they're only able to pay me in May, well, that income I produce is zero because they have not paid me anything. So it's possible my March is looking really good because it's tax season. It's, we have a lot of work, sure. But if they don't pay me into May, well, I essentially had zero income on a cash basis method. So we've had some clients, about 10% of our clients that were ineligible for accrual, but were eligible for the cash basis. So keep that in mind. The best way to look at it is you're looking at your bank statements based on deposits received, okay? And there's a special rule for nonprofits and charities. The special rule is that you can include or exclude government sources of funding. Okay, so if you're funded through the municipal government or provincial or federal, they have given you an inclusion to include or exclude the government sources of funding to determine your revenue criteria. To be clear, understood that. Staff last day, March 13th. Pay period ending March 21st. Staff paid for last week, worked on March 26th. Due includes in CEWS. We are accrual. So for determination, it's always based on pay date. I'm going to talk about it. I have a few more slides on this topic, but it's pay date. So when you're determining which period their wages fall under, always based off pay date. Always think about when would I issue this T4, right? If I paid somebody January 2nd, 2020, would I issue the T4 in 2020 or a T4 in 2019? You would issue in 2020. So it's always based on pay date. That's how we run in Canada. Regardless if the work was done in December, if you're a monthly payroll and you paid January 5th, it's January 5th. To answer your question, Jane, employee eligibility. So this is really important to understand too. You have to be employed in Canada. Okay, no problem. Except if there was you're excluded, except there was a period of 14 or more consecutive days where they did not receive any pay by the employer. Let me break that down for you, okay? If your final pay period, the date, the actual pay date, so not the pay period end date, maybe I should have modified that, but if your final pay date was March 27th and you closed your doors, these employees had 15 days of no pay in that period. They're not eligible. So let me expand that out again. If your last pay date was Friday, March 27th, and you closed your doors and that's it, based on that exclusion, those wages are not eligible for the CEWS. I think it's silly because if you had delayed the payroll to be paid on Monday for whatever reason, well, then there's less than 14 days, their wages are included for the CEWS. It's silly, I agree, but that's what it is based on the Bill C-14, is that there was a 14-day or more exclusion. And the reason why they did that is because there's an overlap with the CERB, right? Someone who'd been laid off on March 25th more than likely went on the CERB and received their $2,000, their 4-week payment. So there's a strong overlap between the CEWS and the CERB, and that's why that sort of stipulation is in here. You can retroactively hire and pay them back though from March 15th, and you would meet the eligibility criteria. So you can go back a month and a half ago, bring those employees back on payroll, pay them through the CEWS program, and they would be eligible if you meet the revenue criteria. However, there's an interaction with CERB or CERB. Of course there is. Employees might be required to repay some or all that CERB payment they received, right? So was it more than $1,000? If yes, well, then they got to get the CERB back. Was it less? Then maybe they keep it. It's very complicated. I would only advise this if this makes sense for your business. And talk to your accountant. At the end of the day, it's a very complex topic, but you can retroactively go back in time and hire them back and pay them for wages from March 15th onwards and be eligible for the CEWS. Just something to keep in mind. What do they define as eligible remuneration? Wages, salaries, fees, commissions, taxable benefits. Those are all considered eligible remuneration for their formula. It's anything you would normally remit source deductions on. Easiest way to think about it is that if I'm going to take taxes or EI or CPP off it, yeah, it's remuneration. Simplest way to think about it. You will need to determine their baseline remuneration as part of this formula. So it's not only revenue, it's not only benchmarks and cash versus accrual, and if those employees are eligible or not, but also their baseline. So that's an average weekly remuneration paid between January 1st to March 15th. So that's their baseline, and it's part of the overall formula in the CEWS spreadsheet. You also have to exclude any period of 7 or more consecutive days for no remuneration. So if they're casual employees and they work for 2 weeks and they're off for 1 and work for 2, you would exclude that 1 week for their averaging. That does help the overall baseline, so I would definitely consider that as part of your work. The math behind the subsidy is very complex. There was a CRA spreadsheet that was released and they've already made revisions to it. I'm not going to click on it, but the slide deck will allow you to click on the link and to give you the spreadsheet. I have a screenshot of what it partially looks like, and I'll show that in a sec. To note as well, you can be reimbursed for the CPP and EI contributions if your employees were not working or being paid. So I know it's complicated. So if you are paying your staff, right? If you're in a situation where you're still consistently paying your staff, but they're not working, you can get reimbursed their wages, 75% of the wages or more, but you will also get reimbursed the CPP EI. You'll still have to remit. You still have to remit those source deductions, but what's going to happen is when you do your application, you're going to get your CPP and EI back to those employees. So any employees that were not working, that were being paid through the CEWS program, they will reimburse you 100% of the CPP and EI. Can you give an example of a salesperson that gets a monthly base plus commission? So I'm going to assume, so you're going to include all wages together. So if they work in 40 hours a week, you're going to take their monthly base wage plus their commission divided by 4 weeks. Or divided by, if it's, you essentially want to base it into an average. So what you can do is you can take that monthly times 12 divided by 52. That's essentially what their average baseline is. It's a very simplistic way to look at it, but you want to determine a baseline. So if someone's working 40 hours a week, making $2,000 a month plus commission, you take those wages together and you try to determine what their weekly amount was. You don't have to go into the detail and say they made $400 a week 1 of commission and $200 a week 2. Like you can just take it and sort of make it into a weekly basis, because they're only putting this on a weekly or bi-weekly sort of amount. So they haven't released a spreadsheet to include monthly or semi-monthly. They want you to revise it into a weekly or bi-weekly basis. Again, talk to your accountant on how to help you with that. We're doing it on behalf of all our clients. It's just a service that we provide. I'm not charging extra for this. So it's just part of our scope is helping businesses out. It's like, I think it's important during this time for accountants and bookkeepers to be involved more so than ever. A future spreadsheet walkthrough webinar can be available if there's interest. I would reach out to Eric and his team. I'm happy to do that. And it could be an hour-long walkthrough of the spreadsheet and how to go through that, because it is very complex. It looks like this, and that's just one sheet, and that's just one part of the spreadsheet. So I'm happy to do that. If there is interest on someone like me to guide you on a high level with different examples, and I can come up with different examples because that'll be helpful as well for you, for your business. I'm happy to provide a walkthrough if there's interest. So just reach out to Eric, reach out to Adrian, Nick at the counties, just reach out to them, and I'm happy to jump in again another webinar. And I can share my screen. We can go through examples. It'll be super fun.
We'd be happy to host that again. So
yeah.
if you are interested, we're going to send the slide deck, like a combination of the slide deck or a copy of this recording out to everybody. And if you are interested in that kind of seminar again, let us know. We'll look at numbers and we'll work with Nick, the local EDOs and everybody and put something together by all means.
The counties would be happy to sponsor that.
Perfect.
There you go, guys. Another question from Helen. What if business is expanding and income was zero for March 2019, but 2020 had events booked for $7,500 on top of $6,000 expected from members who couldn't come out to the facility? So you have two options to choose from. So you can choose year over year. So in this case, if your income was zero March 2019, you would look at your averaging from January and February. So if you're a new startup, if you've only started your business on March 1st, you're not eligible because you don't have a baseline revenue criteria. You didn't have any revenue in January and February. You didn't have any revenue in 2019. So you're disqualified there. But to answer your question, you will, in your case, the only option is to look at your March 2020 against your average of January, February. And then you can look at cash or accrual basis, which could be helpful in your situation, depending on your industry. So this is a general overview of what the spreadsheet looks like. It's very intuitive, but there's a lot of traps sitting here for you. What I mean by that is they're not telling you, they're not telling you how to calculate in detail the average baseline. Like you have to do that yourself. And they're not telling you if you meet the revenue criteria. So there's a lot of involvement behind the scenes that you have to do before you get to the step. But we've been using our payroll reporting for every client to determine the baseline and what wages they got paid in each period. So happy to provide that. Oh, is there a question? Rob, do you have a question? Saw a hand up, but I think it went back down. If I see it again, I'll ask. How are we doing for time? 13.
So
okay.
Andrew, sorry, Andrew, interject. It's Nick here. I do believe Rob has a question. His mic is muted. Rob Hunter.
Oh, okay, because I didn't see his hand up. That's why.
Oh, I saw his hand in his camera. I think that's what I interpreted.
Okay, I'll mute him and I'll see. Hey, Rob.
Hi, Andrew. How are you?
I'm doing good. Yourself?
Good. Very good presentation, by the way.
Oh, I appreciate that. Thank you.
And this might be a question towards the end, but I wanted to at least get it in because I wasn't sure if this is kind of the completing of this.
Yeah.
And I guess it's more of a question for Eric as our MP. My understanding was earlier this week there was an announcement by the federal government of providing $287 million to the local CFDCs. And I was wondering if those funds were for the local CFDCs to provide those emergency type grants. I know our local one in Cornwall and the counties towards the end of March did a great and wonderful job providing grants to our small businesses, and there was great uptake. But I haven't heard anything, and just wondering if that was the intent of that $287 million.
Short answer is yes. Last night on our business town hall that Jim and I hosted, we gave an update on that, and we had Leslie Thompson at one point come in just to chat about that. The dollars will be allocating to the CFDCs, details to come, what the amount's going to be, what the eligibility is going to be. So I will send around, actually you can see on my Facebook page the meeting from last night, and you can see that segment on there. So we're going to host something similar to this when the CFDC type program is launched in the coming weeks, when they know what the eligibility is going to be.
Okay, that's great. I will wait for the email on that program because I'm sure there's a number of our businesses here in South Dundas would love to take advantage of it. So thank you very much, Eric.
And I will just note, as Andrew's talked about the CEBA, the business account of $40,000, dividends and sole proprietors that don't have that payroll threshold or don't have that that certain box number of minimum 20,000 aren't eligible for the CEBA. I'm actually hoping that the CFTC might be able to cover and assist those businesses through that chain and supply of dollars. So again, stay tuned for more details.
Okay, that's great. Thank you so much. And again, Andrew, great job. And Eric, thank you so much for sponsoring this session. I think it's wonderful for our businesses to actually be able to speak to an expert and actually help them navigate these programs.
Happy to help. Yeah, perfect. Thanks, Rob. Yeah, so to echo on Rob's comments, the CFTC is a great organization. A few of my clients did receive, and Leslie Thompson is and her team is nothing but short of amazing there, did receive emergency loans. So I'm excited to see that funding pushing through. And I do mention that at the end of the slides about that new program for the regional CFTC program. So great question. So CEWS, how do you apply? Well, you apply through your My Business account. You're a represented client, which means that someone like me can get access to your CRA portal to do it on your behalf, or a separate online portal. So there's 3 different ways. So if you don't have your My Business account and your accountant doesn't want to do it because they're not hands-on like we are, you can apply through a separate online portal. It opens Monday, so it's like it's a few days from now. So I would say make sure to have your data ready to go and work on it today, work on it the course of the weekend. Because it's going to be, I don't know, it's sort of it's something on a first come first serve basis, but I don't know if you're behind the line, if you're going to be delayed a bit. Because the CEBA, for instance, if you were one of the first ones to apply, you got your money in like 3 days, but if you were a bit behind the curve, it took like 7 or 10 business days. So something to keep in mind. Diego had a question, which is, I started my brokerage, what can I do? So great question. There is eligibility for a 10% wage subsidy, and there is no revenue criteria there. So it's called the temporary wage subsidy. I'll talk about that in a few slides from now. But that is a 10% reimbursement immediately, and it affects your cash flow today. And how that works is you take 10% of the wages, and there's a maximum threshold on what you can take. It's like $25,000 per employer, and I think it's $1,700 per employee or $1,350 per employee. Can't remember the numbers off the top of my head. But you take 10% of the wages and you reduce your income tax portion when you remit your source deductions. So that's how it works. There is a 10% subsidy available to you today, retroactively as of March 15th. Depending on your situation, you could be eligible maybe for the CERB. CEBA, no. And so unfortunately, a lot of new businesses are sort of, I don't know, I'm not saying being missed or being forgotten about, but there's nothing much available for new businesses. But I will talk about some different options that are available towards the end of the presentation. You will have to attest that you meet the eligibility requirements, and there's large fines, penalties, and potential imprisonment for falsifying your application process. I really want to make sure that's super clear for everyone. Do not try to get away with falsifying an application. If you are 14% revenue reduction, you're not eligible. Even though you might say, well, that's not fair. I understand, but that is a fraudulent application. And there's a minimum fine of 25% of the amount received, up to 225% if it was negligence, as in if you knew you were falsifying your data, right? And you apply for the CEWS and you get the money, there could be 225% fine. But let me explain, even 25%, like, well, it's not that bad in the money today. But the problem is you're going to spend that money, right? If you have employees you're paying, you say, okay, we're 14%, I'm going to apply. You bring them back on, you keep them on. I understand the intent. I appreciate it and I respect it. However, it's clear as mud. No, it's not clear as mud. It's clear. It's very clear that it's 15% reduction in revenue for March, and then 30% April and May. A 25% fine, if you receive $20,000 of subsidy, you spent that money, right? To get the subsidy, you've had to spend money on payroll. So not only you got to pay $20,000 back, but also a $5,000 penalty. That's $25,000 Do you think you're gonna have $25,000 6 months from now? Probably not, right? So I would highly advise and make sure that when you're applying for the CEWS and you're testing, because that attestation makes you completely liable. Make sure you hit your revenue criteria. If you're unsure, talk to an accountant. For me, do it for me. Thank you. I have a lot of FAQs on this one. I know we're getting close to time, so there's a question here. So Johnny, I will unmute you. Go ahead.
Yeah, Andrew, you can hear me?
Yes, I can.
If a company does not use the option of my account, my business account on CRA,
yeah,
and the online portal, I assume you access the online portal with the CRA website, right?
Yeah, if I had to make a guess, it's going to be some kind of external website through the CRA.
Right.
It won't be attached to your business account, but you might have to provide them information like your business number, your payroll number.
Exactly.
Yeah.
All that stuff. So if in fact you decide to go with the online portal application method, any indication, any suspicions on your end of how much longer that's going to take to get this?
Yeah, great question. If I had to make a guess, it's probably all going to funnel through the same means. So,
okay.
Yeah. So I'm gonna guess and visualizing that it's just an external website, just like the CRA My Account, like someone mentioned a while ago, to apply for the CERB, and where you didn't need to register a CRA My Account, but you can still funnel through the website. I'm gonna imagine it's the same process. So you go through your CRA account without having an account,
right?
And you're essentially applying to the same platform. So I don't think you're going to be behind the curve as long as you apply in the same time as everyone else.
Right. And another short question relating to that: if you're applying for a business account, to open a business account with CRA, are you allowed to? Is the application still going to go through if you're waiting for your code to receive your code? I know at the end of the application you have to apply for a code. You can get it either through email or through the mail. Do you literally have to? Does that complete your application when you receive the code, or can
Probably
you?
Not. I think it's going to be. I think it's going to be completed, and then to say, hey, here's a code, so you can get your My Account up and running.
Oh, I see. So you may not have to wait for it.
Yeah. So what I'm going to understand, what I think is going to happen is there's going to be a separate online portal you can apply through, and it's not going to be determined if you have your My Account fully registered or not. It's like,
I see.
You'll probably register. You probably apply for the CEWS, then they'll probably mail you a code, but the application is funding through.
I see. So you say if you don't have a My Account, then you should just go the online portal way to be sure.
Yes, that's exactly what I would recommend for sure.
Okay, great. Thank you.
Yeah, no problem. So can new hires be eligible for the CEWS? Yes, as long as you meet the eligibility criteria. New hire wages are eligible through the CEWS. So if you're a business that has been affected by COVID-19 on the revenue side, and so you meet that criteria, if people are leaving, if people are quitting, or your March was really bad, your April was actually coming up again, like you can actually hire new staff and be eligible for those wages. Can shareholders and family members be eligible for the CEWS? Yes, it's a big one. People think, oh, I'm a shareholder, like it's unfair, I'm not eligible. You can be eligible as long as there was a baseline remuneration between January 1st and March 15th. So what that means is that you can't just suddenly put yourself on payroll and get subsidized. Even if you meet the revenue criteria, it's part of the formula. One of the sort of underlying criteria is that you've, as a non-arm's length employee, which means that like as a shareholder or an owner, a family member of an owner, you needed to have a baseline remuneration. And that makes sense because they didn't want to have shareholders suddenly hire their family members and get them on the CEWS, right? So they're saying if you didn't have payroll between January 1st and March 15th, no go. You can pay them payroll, but it won't be able to get subsidized. Will new businesses that open up on March 1st be eligible? Unfortunately, no, because you are pre-revenue and you have no benchmark to compare yourself to. If I had a 14% revenue reduction, can I still apply? As I mentioned, no. The federal government is very strict on their requirements. Applying and receiving the CEWS would be considered fraudulent in this case. There may be revisions in the near future, right? So they have put a stipulation in Bill C-14 that they can advise these percentages and extend it up until I think September, October 2020, which means that it might be 30 in April, it might be 30 in May, It might be 40 in June, 50 in, like, if it's a staggered effect, you can potentially still be eligible for the CEWS for the next 5-6 months. But at the moment, it's 15% in March. So if you didn't hit the 15% revenue reduction, don't apply. As a sole proprietorship, is my income considered to be wages? As a sole prop, owners cannot be paid via payroll. So it's you can be taking wages out as much as you want, but you're not supposed to be getting a T4 slip as a sole proprietor of your own business. So no, it's actually one of the large benefits of being incorporated during this time, because if you're incorporated, if you as the owner were putting yourself on salary, guess what? Now you actually are, your wages are eligible for the CEWS if you were paying yourself before COVID-19. Is it fair? No, not saying, I'm not arguing against that, because I believe it's not fair, but it's why you hear a lot of lawyers and accountants saying maybe you should consider incorporated. Not because people are, at the end of the day, we're typically thinking of your best interests, right? It's like, and different programs are available for corporations sometimes, and they're not available for sole proprietors. I don't believe that's fair. I see a lot of people incorporating when they shouldn't be, but I also see a lot of people that should be incorporating when they're not. So it's a double-edged sword. But if you were incorporated and you were paying yourself a salary, your wages could be considered eligible. As a sole proprietor, your wages, because you don't have wages, it's whatever your business is pulling in net income, that's your income for the year. So you can't put yourself on payroll. I've seen people try to do that, where they do issue themselves a T4 as a sole proprietor of their own business. Don't try to do that, because if yeah, on paper it's showing that you're on payroll, but in reality, if that's audited, well, that could cause a red flag. So just be careful there. Will it be taxable? Yes. All amounts received will be considered taxable income. And that's fine. The thing about it is that you're going to have expenses, you're going to have a revenue. So it's like, don't get mad because it's taxable. It's like they're getting their money. You're going to have expenses to allocate against those incomes. So you're not going to pay any extra taxes because of the CEWS. So don't worry about it. Do independent contractors count as wages? No, it has to be strictly T4 related employees. Does my decline in revenue have to be related to COVID-19? A decline in revenue does not need to be related to COVID-19. So if you are a business that has just been affected in general, you do not have to sort of defend it because it's COVID-19. So if your business had a big contract and it just didn't happen for whatever reason, even early March, right? It's like, because again, it's March as a whole as you're comparing your revenue. So if before COVID-19, you had this big contract, it didn't happen, you had a big loss in revenue, you could be still eligible for the CEWS. So keep that in mind. You know, as I mentioned a while ago, there is a huge difference between accrual and cash basis on the accounting side, but in this case, for the CEWS eligibility. So some of our clients were eligible under cash basis, but not the accrual basis. The determination was possible via an accounting system in place. 10, I know it's a lot of questions. Hopefully I'm trying to hit every question I've been asked, but also been thinking about myself. Does this mean it's possible to receive full reimbursement for some of my staff? Yes. So something to keep in mind is that if you were paying somebody $1,000 a week, and now you can only bring them back down to 75%, okay? If you can only bring them back down to 75% and they're subsidized, you're essentially getting reimbursement for 100% of their current wages. So if you're only paying them $750 now, $750 because you're only working 30 hours a week instead of 40, you would essentially be eligible for a reimbursement of 100% of their current wages. So it's important to be talking to your accountant and saying, you know, what's the best situation here? Like, this person, I don't have enough work for them 40 hours. Well, if you have work for them for 30 hours, they could be making more money being employed than on the CERB. And that's the intention of this program. They want you to be retaining and keeping your staff through payroll, because when this is all done, they want the economy to be moving fast, right? They don't want to be slagging 2 to 3 weeks, orientating, onboarding. They don't want to be doing that. So if you can keep your staff on board, it's a win-win-win. It's a win for the government, win for the employer, win for the employee. And you might be thinking, why is it a win for the employee? Remember, there's a $500 a week cap. In my example of someone who was making $1,000 a week, now they're making $750 a week. So they're making 50% more available to them. And it's not costing you anything except CPP and EI if they're working, and WSIB. So you're paying cents on the dollar for labor, and they can work from home. They can, you can figure it out, and you can have do Zoom meetings or whatever you want to do. But it's possible, to be theoretically possible, to have them back on payroll and they get subsidized 100% of their current wages. So keep that in mind. And I would definitely look at your payroll and say, crap, there is work for them to do. It's only 20. Well, it's fine. You can pay them for 30. You don't have to only pay them for 20. You can pay them for 30. You can pay them 75% of their pre-crisis remuneration and get subsidized for that. Am I required to top the 25% difference? The federal government has asked you to do so when possible. Best efforts. So they're saying, please, they're not forcing you to do it, okay? So if your business situation is like, listen, our doors are closed, or we're a restaurant that is only doing takeout and we normally don't do takeout, so we're at 30% revenue reduction. Well, if you can only bring your staff back on 75%, then do that. It's what it's there for. If you can top them up to 100%, do that. But they're not forcing you to do it. How does this interact with the 10% subsidy? So I mentioned there was a 10% subsidy available for all employers at the moment, and it's not based on revenue reduction. If you're eligible for both, you will reduce the CEWS by the temporary wage subsidy. So if you're receiving the 10% today, when you do the application, you're going to reduce your 10% by the 75. You're going to reduce your 75% by the 10%. Oh, so that's the CEWS. That took up a lot more time, which I'm not surprised about because it's so detailed. I'm gonna have a few more slides to talk about. I know where it's 1:30, so I'll hopefully kind of speed through this and we can ask any questions.
I'll just mention, Andrew, as well, we're welcome to stay on the call for as long as we need, or the Zoom session as long as we need. In the event that somebody, say, has another meeting in the next couple of minutes and needs to go to, we're going to be uploading this to YouTube and sending all the participants a link. So again, if you've missed the last whatever few minutes it may be, you're going to be able to go back and watch it if you've missed it. So everybody's welcome to stay on. We'll continue going on, but if you have to slip away, we got a backup plan.
Perfect. So new. So this was announced last week. Some updates to this morning. So I went and updated the slides. Is that it's being funded jointly. So it's the Canadian Emergency Commercial Rent Assistance. I'm calling it the CECRA. Sounds like Ryan Seacrest to me, but whatever. I'll take it. I'll take it in stride here. So it's funded jointly with the provincial governments. So it's non-repayable loans to commercial property owners to cover 50% of rent payments for April, May, and June. Okay. It's my understanding is that loans will be forgiven if the property owner agrees to cut the rent by at least 75%. Small businesses will cover the difference. This is very new. If you have any questions, I can try to answer, but at the end of the day, this was just announced, has been passed through tax legislation. So question already. So go ahead, Colleen. Oh, wait, sorry, missed you here. Go ahead, sorry, go ahead.
Oh, can you hear me?
Yes, sorry.
Okay, so what I just read was, first of all, I need a mortgage on my building to qualify.
See, that's those very specifics. I didn't hear about that.
Okay.
And I'd be very surprised if that's actually like a requirement, because you're sort of punishing landlords, especially in this community, SD&G, where mortgages on commercial real estate is not as high as places like Ottawa or Toronto, right? So I'd be surprised to hear that isn't actually a stipulation that you need to have a mortgage.
And what I'm going to do is I'm going to put an update on Facebook likely this weekend. I've got the student employment wage subsidy program to give some details and links to post on. Because this rent assistance was just literally, Andrew was typing this as we were in the waiting room to start this. Yeah. So kudos to him. We'll try to send some of that information, frequently asked questions and stuff around and address those. Where I literally haven't had a chance to read the details, saw the high level details of this, but we'll try to get you more details by email and on Facebook in the next 48, 72 hours.
Perfect. I have a few slides here, so it's not so much left over here. So a question from Penny: is it up to the landlord to apply for this as a tenant? Good question. I think it's, I don't know. I think it's going to be some kind of collaboration, because if the business owner is paying the rent, then the landlord doesn't need to apply. it's going to be a tough program. You're talking about involving municipal governments, provincial governments, federal governments, landlord, business owner. It's actually, it makes sense on paper, but logistically it's going to be a nightmare. So can't really answer that question yet, but it's probably going to be some kind of collaboration between the business owner and the landlord. As a reminder, income tax filing deadline is now June 1st. So it's instead of being April 30th, it's June 1st. Payment is due on August 31st. HST deferral. So I mentioned last night, payments that were due on or after March 27th is now deferred to June 30th. However, please ensure you still file your HST. This is only a payment deferral, not a filing deferral. If you miss your filing deadline, you can get penalized 5% in one shot. 5% for missing it, 1% for every extra month that you miss it. So don't miss your quarterly HST remittance that is due in 6 days, please. Employee health tax exemption has been increased to $1 million for 2020. This is potential savings of around $10,000 per employer who would use the maximum threshold. WSIB is allowing the deferral of both reporting and premiums on August 31st. So that program is where you don't have to actually report. We're still doing it for the sake of doing it, but you can actually delay the reporting portion up until the end of August. New, so as Rob mentioned and asked a question about CFTC funding. So additional CFTC funding is expected in the next few weeks. Be on the lookout for a webinar on this topic. I think Eric will talk about that maybe today or next week, but with Leslie Thompson at our CFTC. Another program I want to mention is the NRC IRAP program. It's for startups who are not eligible for the CEWS, but you have to be tech driven. There's a sort of separate application process. I did want to mention it. They are investing a substantial amount of money for SMEs in this program. If you're a tech driven startup that is not eligible for CEWS because you're pre-revenue, there's an application process that ends on the 29th. So next steps to think about in your business. Today, like start thinking about over the weekend, next week, next month. Our firm always recommends for every business to have a separate commercial bank account. You will see a lot of bank managers have good relationships, Kelsey White at BMO, Mireille Lemire at RBC. It's like, these are people that always typically recommend you to separate your business and your personal. And unfortunately at the moment, unless there's sort of behind the scenes adjustments, but if you didn't have a commercial bank account on March 1st, you're not eligible for the CEBA loan. So always separate your commercial and business. Depending on your business structure, consider incorporating for future protection on program eligibility, right? So it's unfortunate, but you know, if you were incorporated versus a sole proprietor in the exact same scenario, as in you're paying yourself a wage, right? Say $50,000 a year. Say your sole proprietor is doing quite well. It's quite profitable, $50K a year, and that's your wage. Both scenarios there, the sole proprietor is not eligible for the CEWS for the wages, not eligible for the CEBA. As a corporation, you're eligible for both. So you can see that there's a big difference, and they're sort of rewarding businesses that are incorporated. Again, I'm not saying it's fair, but a lot of businesses only work with corporations, and same thing with the government for contracts. So something to keep in mind is if your business is in that sort of threshold of maybe incorporating makes sense, it might be a good idea to talk to a lawyer in regards to that to protect your business moving forward, because you know, at the end of the day, you need to set a foundation for your business to protect yourselves. And as well, something I always recommend in different seminars I do, and every client of ours, small or big, has this: have an accounting solution in place. Reach out to a firm to assist you in implementing one. If you want to do the bookkeeping yourself and doing it through Excel spreadsheets, it's nothing wrong with having an accounting solution in place. There's some free ones out there. There's ones that are inexpensive. We put all our clients on an accounting solution. It's small or big, and it's something I recommend. And whether we can help you assist in implementing on one, so you can do it yourself, or we can take it over. It's something we're very passionate at Seguin Financial and doing your bookkeeping. We use a lot of fun technology. You know, we have an app on our phone that you can take pictures of your receipts. That's, for a lot of our clients, that's all they do. They take a picture of the receipt. We get access to the receipt the same day, hooks up in their accounting solution, and now we're paperless, right? So it's pretty neat. We have that app for all of our clients, small or big, and having accounting solution in place allows us to determine your revenue criteria, right? That was one of the most important steps on the CEWS program was, did you hit a 15% revenue reduction? Did you hit a 30% revenue reduction? And prepare to defend your applications. So in the auditing phase, as I mentioned before, there's going to be a lot of new hires to the CRA program. Be prepared to defend your applications. If all you're working off is bank statements, listen, that's not going to be enough information. I'm sorry to say, but it's not. I don't care how small your business is. If you're going through the CEWS program, you're going to have to defend your application. And they're going to be spending a lot of time auditing. I'm not saying this to scare you. I'm telling you to help prepare yourself, right? So when you're attesting that you've hit a revenue reduction and these are the wages you paid, have reporting, have documentation, just in case. Will everyone be audited? No. Will 25% be audited? Yes. That's my assumption, because it's so much money in this program. It's substantial enough to be investing a lot of money. Some resources here. So Jim mentioned last night about a website that has been uploaded. I checked it out. It's actually really helpful, and that's coming from an expert on this, quote unquote expert. It's very detailed, but summarized very nicely, and they give you nice links to kind of reference different websites. I'm also putting up the C13 and C14 legislation. As well, there's a regional business survey, which I would highly recommend you doing. We have a lot of data on a national and provincial level, but we don't have a lot of data on our region. So fill this out. It's through the counties. It's very important for us as a community to be answering these questions, because at the end of the day, if businesses are having issues and having needs and need assistance, it's tough to know that unless we're sort of funneling that through one means. So you click on that link and you'll send you directly to the actual survey. All right, so I think an hour and a half was pretty good. It's a bit longer than I anticipated, but that's usually what happens with my seminars or webinars. So.
Can I pipe in for a second here, Andrew?
Go ahead.
A big thank you from SDG, Cornwall, the local municipalities for doing this today. I would also like to mention that this idea was brought to the counties by Rob Hunter, a local economic developer from South Dundas. I feel like I need to mention that because Rob called me up last week with this great idea. Thanks, and kudos to him, and thank you to Rob for bringing that to our attention. And thank you to the City of Cornwall for supporting this, and all the municipalities, and thank you to Eric. We have a wonderful community. We'll get through this, and we'll just keep leveraging all of our great resources and all of our great people. Thank you.
And I'll just echo as well. Good to see the partnership. Thank you, Andrew, for the information. We will be sending this video around. I'm not sure, Andrew, are the slides going to be available, or could they be available?
Yeah, I'll send it to you after this.
Awesome. So we'll send that around probably in the next 24 to 48 hours. And any questions, just follow up. Ideas for other seminars. We've talked about the rent program, and again, the emergency wage subsidy as well. Employer wage subsidy. We could do a special session on that with a spreadsheet if there's interest. So let us know, give us your feedback, good, bad, or indifferent, and we will be keeping in touch, I believe.
Yeah, and if there's any sort of private questions you want to ask me, feel free. I'm happy to help, no charge during these times, because, as Eric mentioned, and Nick mentioned, we're all in it together. I believe our community needs to be working alongside each other and not against each other. So I'm happy to help out, have a phone call, do 5-10 minutes, no pressure. I'm not going to try to sell you on our services. That's not what I do. Born and raised in Cornwall. I love this community. We had a huge momentum before COVID-19. So just trying to do my part here, and happy to help out in any way I can.
With that, I think we'll wrap up. See, it's a few positive thank yous in the chat, which is great. And we'll go from there. Have a great weekend and stay safe, everybody.
Bye, everyone.
Andrew, thank you.
Yeah, no problem.
Absolutely. Are we offline, or are we still online with folks? Or?
I think we're still online. Yeah.
Okay. I'll give you a call afterwards. Just wanted to give you a private thank you, okay? Take care.
Thanks. Bye, everyone.